Hello, today is February 8th, 2025. As always, we'll do our disclaimer. We'll go over our calls and then make our predictions. It's my trading plan for Monday. Monday is February 10th, 2025. Please remember, this is my plan. I can change my plan. My plan can be wrong. Trade at your own risk. On Friday, we looked for the pattern with the early low, which is this, and Monday should also have the early low. We had a great plan if Friday's low held. We had balance of the waves down to 58.64 cash, and we said if that held, ideally by gapping down at the open, that was our target. Well, that never happened, so there wasn't really a call. We did have an optional target of 6,046.70. We came close, which made it optional. I said it almost always prints anyway, and it printed on Friday. This is a review of what we said. These are the patterns for next week. At some point, we have to have a fine leg down to complete the current consolidation. And we've been trying to find places where that drop starts. We've had a number of candidates. This is one more candidate, as we see. Now, we did leave some price targets behind. MEJT said this drop from the morning was a false move. Target 6,063.62 says the evening move is false. Target 6,051.47. But let's remember, if this is a major change in trend, the system will almost always leave failed targets behind. So that's when you're near a high like this, you can't really count on that. These numbers should print at some point. But when you leave failed targets by a high, it doesn't mean it's not a high. It actually can confirm the high. But until we get a break, we can't be certain that's what it is. This is our longer term chart. This is a straight line drop right to this significant trend line. And the rule is either you gap under the trend line or the line wins. Now that was pretty negative action on Friday. We broke out to a new high. Closed, here's the close, under multiple prior highs. All we have to do to start the move down is to confirm that by trading lower. I don't care how bad it looks on a day. If you don't get follow through the next day, it doesn't count. We gap up here, this break doesn't mean anything. But for right now, if we gap under this line, I would tend to believe it. I would think that would keep on going till we hit our target in the 58.60 area. If that's true, you have to find some other way to count the waves. Now, for a long time, we have an ABC here. Here's A, and if you start from the beginning of A to the end of A and draw a Fibonacci grid, and then transpose it to the beginning of green C, you'll see how you get hits pretty close to 61.8 and pretty close to 78.6, and it's reasonable to think the next leg down is going to be around 100%, around 58.64. Now, we've been counting this as A. For a long time, we counted this as a 5-wave structure ending here, and to make the waves balance Thursday evening, we had to change this from a wave 3 to a wave C, but now I think it makes sense to count this as 3 again to make the waves balance out. Let's go to a smaller term chart. Let's say this is really a wave 3 and that's wave 5. That would be the end of A of green C. And if you set blue A of red B of green C at 78.6, you'll see how C has a good Fibonacci relationship right at the high. This actually looks more like a wave 3 anyway. So at this high, we do have a good Fibonacci balance between waves A and C. And if that's the end, if this is A and B, we should have a wave red C down, which should have a balance with the new red A, and you'd also want green C to have a balance with green A. Well, green C is equal to green A at 58.64. And if you measure what would be red C and compare it to red A ending here, the waves clearly balance out. That's 61.8 right where we have it ending. So we have balance of the waves around 58.64 if we get the gap down. This is a daily chart, and this at 58.87 is Tom DeMark's TDST line, and there is support at and 1 bar under the line. So if we hit the 58.64 area, you'd also be at support from there. So we have the pattern with the early low. We have a drop on Friday, which the vast majority of times is going to follow through at Monday's open. And if we gap up instead, quite the opposite's true, then this support's held. But if we get the gap down, we have a reasonable target, about 160 handles under where we closed. We'll take out this last unsatisfied MEJT target. We have, actually that's not what I wanted to show. We have this gap down here, and this gap at some time, either before or after the gap, should fill with a consolidation. We filled this part with a consolidation. We filled this part with a consolidation. This area here is unfilled. It hasn't been filled by a consolidation, and that's one more lower target that should fill at some point. So all we need for this to play out is for us to gap down, but of course the last few days, all we needed for the drop to begin was for us to gap down, and that didn't happen. So we have one more candidate for a high here, and we'll have to see if that works. So it's the pattern with the early low regardless of where we open. We have higher targets unless we gap down smartly. The rules call for them to print, but gapping down smartly, leaving unfilled targets near the high is entirely possible. The move to a new recovery high was rejected, and the close under multiple prior highs, if maintained, is a bearish pattern. Where a trendline support and all that's necessary for a sizable drop to begin is for us to maintain a gap under that support. And if we do, there's wave balance around 58.64 cash. So it's the pattern with the early low. All we need is to get follow through. If we do, it's bombs away on the downside. But if we don't, then something else is going on. Usually we'll get it, but usually and always aren't the same thing. We'll see where we open, and that's today's call.